Greetings, Jedi traders. David here of TradingFibs.com to bring you a recap of the indices. Today is October 2nd, 2015. Looking ahead to next week. Let's take a look at the markets for this week. See what we were able to accomplish and how that's used in the daily trading strategy in the trading room. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. So let's jump right into the market profile. As we can see here, starting with the Russell. The market profile here starting out the week on Monday at the weekly opening price of 1910.5. And yep, just finishing upside here around 1943 as the market coming to a close here soon. Again, 1910 to 19.5, we can see pretty much sideways price action. But what I want you to take note here is all the dashed lines, whether turquoise or white, representing former daily gaps. That's right, the turquoise lines being daily gaps from previous weeks, the white from the current session. As we can see, we closed out every single previous daily gap, and including some previous gaps down as low as 1873. That's right, 1873.75 up to 1919. And as I've been reviewing weekly, go back in the reviews or go back in some of the articles I've written. I said the market always takes care of unfinished business downside. How do I know they're coming down here? Well, I don't. I don't know whether they're coming down here this week. I don't know whether they're coming down in a half a year or next year. All I know is that the lines and levels are down there. But if the daily picture, the bias is to the downside, and the intraday picture is to the downside, then the probability of the trade to the downside is higher of working out. So here we are. You can see the shadow boxes here closing out whether it was previous daily points of control on market profile, or it was the daily gaps that were closed, now leaving the market open with a daily gap, as we'll close it out for the week somewhere around up here at 1943. Still, what do we have? We have upside, that's right, but the great news is that nothing to the downside on, that's right, I apologize, 1874.75 down here. So yes, the market on market profile still has room to come down. When we get that, just can't tell you that. And I'm sorry, this is the ES. Look, working backwards here. This is the ES. Let's go back to the Russell here. I jumped up on the TF first, but here we go. Here's the TF. First, again, similar price action for the week. Similar price action. Should have noticed from the prices there. I apologize. So here we are, opening price for the week, 1114.3. Shadow boxes showing the closure. Showing the closure of the former points of control. Again, taking care of unfinished business below. Do we have any other levels down below? Ooh, nice. Nothing downside below, as we just saw there on the ES. And as we worked our way up towards here, 1113.5, so 1114.3 weekly opening price, almost pretty much finishing out the week at the same line and same level. Again, price, again, pretty much sideways for the most of the week as Fed speakers were on hand. And here we could see daily points of control closed out every single day. Taking a look at the YM, we'll again put this entire picture today. As we know, daily gaps are open, open points of control, volume profile. How does that all play out? Stick around and see here for a minute. So here we are, the week daily price action. Downside Monday, Tuesday, giving a little rally. Wednesday, Thursday sideways, and what a day today, coming all the way down, closing out some points of control, and then moving all the way upside here on the YM, 16,379E. There we go, closing out even two more. That's right, two more points of control, 1 and 2. That's right, two more points of control as we work our way back upwards in this rally. But again, taking care of a lot of unfinished. These dashed lines will disappear this weekend and leave some open spaces as we have down here, 15,726 below. Do we go down further or do we move up? That I can't tell you. Market profile NQ, again, here's the NASDAQ still doing some unfinished business here, closing out daily gaps in the market session at the beginning of the week. Downside, sideways on Wednesday, Thursday, and then that lift today as we just broke one line after another, leaving now an open point of control and a daily gap up here at 42.6250. But do we have unfinished business below? Absolutely. Down here we as low as 39.9750. Again, points of control and open gaps up above, no problem. We'll go get those whenever we do. But I always a little concerned on the ones downside. Eventually we'll go get them. And then as we started out with the ES, here we see price action started out at the beginning of the week, Monday and Tuesday, Wednesday, Thursday, sideways, and then what a day on the ES upside as it closed out up here at 1943. So knowing that we have daily points of control, we have open gaps, we go to our volume profile. Let's make sure we start on the right chart. Here's the Russell. You could see the trend line that's been coming downside ever since the last couple weeks after we had that little lift. Here we have points of control on volume. That's right, as we look like the Russell was headed almost up here to 11.1820, but never able to reach up here. Value area high. POC for today at 11.0820. But here again, as you can see, the shadow boxes closing out each previous day's point of control, taking care of unfinished business. Now, we mentioned on the Russell before. Let's go back to the market profile on the Russell. We said, do we have open gaps down below? No, we don't. Nothing. 1078.5 was closed out this week. And then we go to the volume profile and we ask ourselves, does the market take care of itself on open points of control? Absolutely. Have we left a bunch upside? Sure we have. Do we have anything down below? Still do. 1029.3. Market takes care of unfinished business. Eventually we will take care of that line. I can't tell you when, but I can tell you the market still has room to come down and take care of that. Here we have the YM. Again, what a week. Friday, Thursday, Wednesday. That's right. We said 2 days downside, straight across, and what a rally today. Closing out these points of control, volume points of control, leaving some down below. What's our lowest line here? Well, we still got some lines down here. 15,160, the lowest, with the 600-day period average mean here of 16,617. Again, guys, the point here is obviously always knowing that we have downside, we have upside movement. What is the probability of hitting these open points of control? Perhaps resistance, support? Well, we need the bigger picture in the intraday pick to support that move. Let's jump right into the NASDAQ. The NASDAQ here at the end of the week, almost getting up there to that 42.7125. It was 10 points away. Thought we'd go get that. Again, look at that. Look at that rally today. Closed out yesterday's point of control, closing out last week's point of control, open 42.1350, and just rallying for a second run upside. Again, most unfinished business every day being taken care of. And following up on the ES here, similar picture. 2 days downside, straight across, finishing up, closing out. We have an open point of control back here. Let's go back to that NASDAQ for a minute. How low are we going to go? We had it pretty low. Yep, look at all that unfinished business, 34.4275. I hate to tell you this, guys, but Jedi traders, one day we are headed down there. I can't tell you when. I can just tell you it will happen. ES, there we go. Point of control taken out. We have room to move up. 1952.50 was almost there. What a rally today on Friday. Downside, straight across. Points of control, 1, 2, that's right, 3, leaving an open one, 1874 after the rally on Wednesday, and Thursday Fed speakers throughout the week. So let's jump into the long-term picture and then give you an idea of the intraday, and let's talk about where we might be headed. Let's talk about the long-term Russell here, the long-term Russell. The upper two charts in the corner here showing the 100-tick range chart and the 4-hour chart showing a change in trend, T3 moving averages. So when we see the upper two charts here in the green and we have a rally going on in the market, even though here up in the upper right hand corner, weekly downside, monthly downside on the Russell, daily on a 51.44 downside, 4-hour chart on a 51.44 downside, now breaking that 50 period moving average, that intraday move where the market rallying. If I get the intraday on the range chart or 1 minute chart, whatever you're trading on, this supports that move to the upside, and that's exactly what we had up here seen on the Russell today. Again, here we are moving between the 50 and the 38% retracement. Excuse me, actually that's 23. Yeah, back at the 23% retracement. Almost soon time to draw some Fibonacci extensions, as we'll see if price action either holds up here. But again, We have already surpassed the 50, 61.8. We're now around that 38%, 23% fib retracement. Excuse me. Let's pull these back, take a look a little better, get those numbers right. So there we go. We're at the 23% fib retracement. We held here at the 38 as we work our way down. Our October 2014 lows 1 year ago, 1038.8. So those open gaps have been sitting down there for a while. So big picture, we know where price action was this week. We had a couple down days. We rallied up. Today we came down, retested that low, and boom, right to the upside. Still haven't shaken the overall big picture on the weekly or monthly, but absolutely still to the downside with a little bit of rally going on here on the 4-hour. Russell, again, if we're going to keep that rally up, well, we got to show some movement here to continue to the upside on the T3 moving averages, which will pull this 4-hour. And once that 4-hour breaks above that 144, we can see a continued trend. But until that happens, we still, bigger picture is to the downside. YM, much better rally today. T3 moving average on the 100 tick, bigger time frame, showing a rally here. Market action as we did a little bit of chop, to the downside. We saw the downside movement in the morning session and then rally throughout the afternoon. 4-hour chart making its way back after that rally from the beginning of the week. As we can see here on the 4-hour chart on the 51.44, now looking for price action to hold above the 144. Will then will pull these bigger pictures, daily, the weekly, and the monthly. We got a while to go to get back upside. Let's take a look at those fib retracements. We're hanging around, I don't want to get those numbers wrong for you, 38% retracement. Look at that, 38% retracements for almost the last week and a half. Have not been able to break upside and break that trend. 50-period moving average coming up. Let's take a look at the long-term NASDAQ. The NASDAQ here, we have the 100-tick range chart upside. 4-hour of all the 3 indices so far seen the biggest and yet best rally on the NASDAQ. As we can see, let's get those fib retracement lines correct. Here we go. That should be the 23%, back up to the 38, coming back up to the 50% retracement. We can actually probably draw ourselves a new Fibonacci retracement as we see price action coming back up here. So we'll take the high, come down here to the low before the bounce, back up to around 50% today. We'll keep that there for the week. See if we break that 50 and 200 period moving average up above. Once we break that and we rally up above that, that will break the trend lines here. I expect that these will be in the green. 4-hour chart will be above the 144, and here on the daily chart I imagine that the price, if we get it back up to 4,400, will just be coming out. Look at that right there. There's that 144 hanging around that 4,400 to 4,365. So price action bar is going to really have to push upwards to get a confirmation and trend on the daily picture to be shifting upside. It's going to take a while for us to get up there, but again, the short-term picture is intraday push to the upside. If this turns back downside, that will be in sync with the bigger pictures, and then I can expect the market to turn back downside into the red. ES, nice rally today as price action on the 100 tick and the 4-hour T3 moving average. These are both T3 moving averages in the upper left-hand corner, shifting. Here we have the 4-hour chart on a 51.44. Again, the bias now shifting as price action holding above the 144. Also on the daily 51.44, we got a ways to go. Again, when we're all in the red, we're all in the red. Makes the intraday pick a little bit easier to go south, even though we can trade in either direction. But here we can see weekly we're still downside, monthly we're downside, and daily. So on all 4 indices, major trends are still downside on the bigger pictures. 4-hour charts on a 51.44 starting to show a little bit of move to the upside. Again, we're at some key Fibonacci retracements, but still holding downside on all 4 indices. And here we can see in the upper left-hand corners, we are showing the slight change in the intraday. So how do we use this on an intraday trend? Well, let's go ahead and take a look at the setup today. Here we have the T3 moving average together with the second bar, the 51, the 5 and the 34, and the bar down below, the 51.44 on a 1 minute chart. Here we can see the trend looking for the buy signal and the crossover. Why do we take the buy versus the sell? Because the bigger picture was to the upside. That's right. You take a look at the NASDAQ. We had the intraday in the green. We're knowing quite well where the bigger picture was. The bigger picture was downside, but we have a change in trend on the 100 tick and the 4-hour tick. And then 4-hour tick, when I say meaning T3, a 4-hour chart on a T3. All right, 4-hour chart. This is a minute chart, 240 minutes. This is a 100 tick range chart. This is a 4-hour chart, both showing intraday changes on a bigger picture. And then we go to the 10 tick range chart, or the this is the 20 tick range chart. All right, 20 tick showing a nice move up here. All right, still, you know, you got your 51.44, you got your T3 moving average, and your 534. But I want you to focus here on just exclusively the price action up here, bouncing above the VWAP. Here's the buy signal, buy signal, buy signal, but we're not paying as much attention to that as the strong trend here back at around the lunch hour, 11:57. Here's our close, Eastern Standard Time. Nice rally back upside. Taking the entry though, where? Taking the entry on the smaller time frame. So you match the entries on the smaller time frame here. You know that the bigger time frame, the 20 tick, all right, you know that the long term is upside, as we just mentioned before. Long term, 100 tick, 4-hour tick is upside. We know that our market profile, let's go to our NQ. We know our NQ's got lines above. We got a weekly open. We got open gaps above, and our volume profile on the NASDAQ, let's look at the NQ, that's right. We got an open point of control upside, including a possible hit all the way up here to the 600 period mean average right there, 42.71. And so we go to the intraday picture. Here's the 20 tick. Again, the 20 tick showing a nice green, nice green, nice green. We're not taking the short because all chart showing everything to be strong in the green, and we trade it off the 10. We enter on the 10 tick range chart, and we manage it on the 20 tick range chart. And what an entry to go. We'll take a look at that trade right there. All right, a little bit different setup here, including that 534, 20, and the 1 minute chart on the 51.44. Everything in the green. Taking an entry down here at that top of the hour. That's right, we just showed you that. At the 12 o'clock hour, all right, here on a 10 tick range chart, there was the entry, takeoff ticks at the whatever determined exit point you have. Here I took off one at 12 ticks and simply managed it on a 20 tick to only exit up here at the top, 42.15.50 on one contract, staying in by just simply managing. That's right, managing on every swing size low all the way up and eventually being stopped out. That's what it takes to remain in the trend. Again, daily picture, we know long term. I can't help but reiterate the intraday change here, even though knowing the trend was downside, the intraday trend change here on the bigger picture, knowing market profile had targets upside, knowing volume profile had some valid targets upside to close, but that's not what keeps me in the trade. What keeps me in the trade is first knowing where my 20 tick range chart is. My 20 tick is in the green. All right, maybe it started to cross earlier than the 10 tick, but there I am in the green, 11:57 Eastern Standard Time. Let's take a look again. A nice rally at the end of the day, but right there, 11:57. Then you go. That's right. You go to the smaller time frame. Only a couple minutes later, there's your entry, buy signal crossover over here at 12:06. And I believe if we go back actually a little bit, let's take a look back here at 12:06. There you go. There was the initial entry on the 20 tick as well. But again, we're looking at key lines. Perhaps we had a Globex, who knows, another form of resistance here. I don't have my 5-minute chart out yet with all its key levels. But again, for whatever reason, the trade was much more preferred at this point. The 20 tick was in trend, the 10 tick was in trend, and once on your way up, you simply, again, you can manage this up on a 10 tick simply by going to each swing size low down here. But again, much easier to manage on the bigger time frame. Place your stop, place your stop, place your stop, swing size. And as you get closer to the top in some key levels, you might want to move your stop up at whatever particular points you decide to keep that in. And what a trade for the entire day. Now, I didn't obviously manage that all the way up. I managed it into this section here and eventually was stopped out. All right, looking ahead for next week. Econ data, we got pretty much a general week here. Nothing other than perhaps FOMC minutes. Jobless claims again on Thursday. Again, if you want more information on the trading strategy, please feel free to travel to my website at tradingfibs.com, where I post the weekly market outlook and indices and other videos. If you're interested in the trading room, please check out the trading room tab under resources. And if you're interested in any of the trading rules as well, I have set up the basic criteria, including some free basic strategy charts that you can implement today. Again, what does it come down to? It's all about simplicity. What does it take to remain in a trend trade instead of in and out and in and out? All green, all green. The 50 above the 144 today really kept me in that trend to the upside. That concludes this week's recap and insight into the state of the indices for next week. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at tradingfibs. And as always, hey, I leave the crystal ball to the experts. I know what happened this week. As far as next week, I can't tell you which direction. All I can tell you is once the trend's in play, I'm willing to trade it in that direction. That's as easy as just trading what's in front of me and on my charts. Have yourselves a Blue Zone day, a Blue Zone weekend, and have yourselves a good day, a good night, and good trading.